come on in. How y'all doing today? Right. So, in our country, and just kind of give a the real truth when it comes to wealth and why they refuse to raise the minimum wage even though they can. So we'll just start off and go through some of the basic lies they tell. If you raise the minimum wage, prices will go up. Well, I'm not going to say lies they tell, but excuses they use, because it's not necessarily a lie that they're telling. Some of it is lying, but most of it is just excuses they use. That they believe justified, but they actually don't. But anyway, they say, oh well, wages will go up, prices will go up if the minimum wage goes up. And that's always baffled me. And maybe because I come from an accounting background. I'm a bookkeeper. My mom's a CPA, so maybe because I come from an accounting background, that's always been a little strange to me that that people always said that. Because for one, I always knew that prices pretty much were going to go up anyway due to rising costs and other factors. Not only that, specifically dealing with wages, why would paying more wages make prices go up when business owners get credit, dollar for dollar credit, for paying you that wage? Your boss, your owner, they get a dollar for dollar credit. Well, not even a credit, a deduction. I would say deduction. They get a dollar for dollar above tax deduction. Every dime they pay you comes off of their profit, which reduces their tax debt. So it's wild because an increase in wages would mean an increase in expenses, or more deductions for business owners to reduce their tax debt so they don't pay so much in taxes. And it's not just the money that they would pay you, which I touched on this in a previous video, but it's not just the money that they pay you, for what you work for, that they get credit for. It's all of the ancillary things that goes along with employment too, that they pay for in relation to the employee. Your bonuses, your retirement, your health, any reimbursements, like anything they give you that's of value, of monetary value, they get, for most of them, not all of them, but for the vast, like for 90% of them, they get an above tax deduction for, and the other 10% they get a after tax credit for it, because it goes against their tax liability. It doesn't come off of the profit. This credit comes after they've been taxed, and it comes off the tax liability. So they're getting credits from both ends before tax. Well, I'm gonna stop saying it. They're getting deductions and credits before and after, respectively. Anytime they pay you money. So that's just all, like, I never understood it. And with all the accountants in the world, all the people, like, I just wonder why no one ever countered that. Why no one ever made the argument that that's actually money that they're not even missing as it relates to paying taxes, because it takes off the tax debt. They're still getting the same profit. The profit is less, of course, if they pay you more money, but that's the only thing. You just decrease their profit, but that doesn't increase their tax debt. So, I mean, a bigger tax deduction is the goal anyway, because also what you got to understand is that that's what businesses do anyway. It's part of tax planning. Most businesses spend cash, just spend money at the end of the year just to bring the tax debt down, just to bring the profit margin down. Like, they'll literally go, whether it's given to charity or whether it's, just buying equipment, buying expenses, buying, anything that they can relate to the business. And, and if you have a good accountant, it really doesn't have to be anything that's directly related to the business. It's something that you could say that's for the business, but you could be using it for yourself. And they take that money. I've never understood why raising wages increase prices, because business owners always look for ways to decrease tax debt. As a matter of fact, sometimes for tax strategies, they just say they just pay a family member some money just to be like a 1099, subcontractor, just to take money off. They'll give their family member $100,000 1099 from their company, just to come off of the profit margin. And again, if you have a good accountant, that's money that you actually probably did not have to spend, because all businesses have, miscellaneous accounts. Cash. Most businesses receive cash, so you can pull from a miscellaneous account where where you spent the same amount of money that you're about to, say you paid your family member. You can pull from that miscellaneous account if the amounts are the same, and just apply it to them. And you don't really have to even physically pull from the account. You can just say that shit. So it gets so many credits. And then, not to mention, it's wild, man. Like y'all really have no idea how many credits corporations get and businesses get. It's so cold that they don't even they have a thing called reserves, right? So they have these reserves that companies can make to where they can just on the books put an amount down for a certain type of reserve. Of course, it has to qualify. There are only certain type of reserves that qualify for this type of deduction, but they can just say, oh well, and all they have to do is just on their book, not even take money out of the account, on their books, journal entry. If they say they have $100,000, they know they're going to have $100,000 in bad debts the upcoming year. For the current year that they're in, the current tax year, they could claim that $100,000 to bring the profit down for the reporting of the current tax, even though they're not going to say they're going to use it. Really don't have to use it. They just have to add to the profit, the next filing, on the next filing for the next tax year. So businesses have so many loopholes to not they can decrease their profit without actually spending. And again, they're always looking for ways to spend more money to reduce tax debt. They do it every year. Again, it's called tax planning, depending on how they want to report on their return, or what type of profit, or what type of loss they want to show. So, but people, mainly do that who have kind of like high profit, high profit people. People who have a lot of profit, they spend bukus of money right before the end of their, fiscal year. If their fiscal year is a calendar year, right before the end of the regular year. But whatever their fiscal year is, they spend bukus of money just on whatever to reduce the profit margin. So I never understood why increasing wages, which is an increase in expenses for the employer, which is a decrease in his profit margin, which is his ultimate goal, because he's going to spend way more than what he's probably paying his employees at the end of the year to reduce his profit margin. So why would if he's going to spend more money at the end of the year than what he's paying his employees to reduce his profit margin, why not give that money to the employees in the first place? And that's why the increase of minimum wage theory is a lie, because employers paying more wages means a decrease in their profit margin, which is their ultimate goal, is to decrease profit margin. And they do it anyway at the end of their fiscal years, because most times they will spend more money at the end of the fiscal year to reduce the profit margin than what they probably paid the majority, I would say, of their employees. I won't say all the employees, because the top 1% or 2 or 10%, however, is getting the majority of it, the majority of the money. But for the majority of the employees, if you add up all their salaries, I can guarantee you, in tax planning and them trying to lower the profit margin before the fiscal year ends, I can guarantee you they spend more money than what they pay the majority. And again, that money can be spent on inventory, things for the business, but this is also what you have to know. It can be spent that are not directly for the business, that they could use personally, so they could buy something personally for them. Take this money at the end of the year, reduce the company's profit margin, and buy things that are, for the most part, not necessarily relatable to the company or needed for the company. They keep it for themselves. And it's substantially more than what they're paying the majority of their employees. So, it's wild. Sorry about that. It's wild. It is completely wild. Raising wages should not, and from a common sense standpoint, which is what we are here at the Common Sense Corner, should not raise prices, because it reduces the profit margin for companies, which reduces their tax debt, which is their main goal, is to pay less in taxes as possible. So to break it down even further, not only do corporations and companies, people you work for, get credits for every dime that they give you and that's attributed to you, they also pay less in taxes from especially from a corporate standpoint. The corporate rate is less than the average individual rate. Like it's crazy that we have in a neo-Marxist society because child of Marxism, that we believe it's okay for tremendous more money than the people they're paying to pay less taxes collectively into the government than the people who they are paying. That is the quintessential definition of Neo-Marxists. Billionaire worship. The wage lie is nothing but billionaire worship. Neo-Marxism, the same thing that they rail against. They rail against Karl Marx, but you are collectively pay less in taxes than the people who they are paying. And they're only paying the people, the majority of the people, a small percentage of the income of the business. They keep the majority percentage of the income that's left over from the business. But the government is taking more collectively from the people who work for these people, collecting these tremendous, who make the majority of the money that the government is taxing, is taking the majority of the taxes from the people who are getting. So all the money that's generated by these companies that the government is taxing, right? Because they're taxing the companies and the businesses too, right? That's all you talking about with business, we're paying too much in taxes, right? So the same money tax those business owners, right? They get more taxes. Yeah, they have they're getting the least amount collectively from the people who keep the most of that money. And again, it is the same money. It's the same money. But they collect the most taxes from the same money from the people who get the least part of it than they do from the people who receive the majority of it. And yet, they still complain about raising wages when you're getting all these benefits? Like, come on now. Like, come on, you already getting the cake. I mean, you already got the cake, but if you can't have it. But they really do. They have their cake and they are eating it too. It's amazing. It's amazing. And again, that's not railing against, corporations and capitalism, but that's just telling you how it actually goes, how it actually works. They give a credit for your pay. So the more they pay you, they get a deduction for your pay. So the more they pay you, the bigger deduction they get, which they spend boatload amounts of money at the end of the fiscal year anyway, just for that same purpose, to bring down that profit margin. And the boatloads of money that they're spending at the end of the year, for the most part, which I can tell you, are not for the business. They are things that are that can be said are for the business, but that also can be used personally. So it's like they are not only are they double dipping, they're triple and quadruple dipping. Because they can buy things personally for themselves and claim it as a business expense, while at the same time talking about, I got too many expenses. Like, so that's just the hypocrisy that I just sit back and look at as somebody who knows. I'm just like, wow. You get so many credits and so many deductions, and there's so many ways that you benefit off of paying, not really on the business. So if you're spending it anyway, and it's not benefiting business for the most part, what is the problem with giving that to the employees? Because it has the exact same effect as what you're doing, other than you don't get to enjoy that dip because your employees do.